us now is Andrew Root. He is an assistant professor at the Regent University School of Business. Andrew, welcome. Good to see you. So inflation has dropped according to the Consumer Price Index, but there are concerns the president's tariffs could actually, create some higher prices. Does that make the Fed's job harder on a day like this when it's deciding whether or not to cut rates?
It does. It's a good question, and it's the question that the Federal Reserve Chairman opened his press conference with, that the risks for inflation and for unemployment are both up. It's a little unusual because usually you would expect if unemployment is going up, inflation risks would go down. But with tariffs, that risk has actually risen at the same time.
So, once the Fed does begin to cut rates, how long, until that really actually starts to help the economy and consumers can really start to feel that?
Yeah, that's a very good question. They did cut rates last year, and that fed through into lower mortgage rates and lower prices for your car loans, but they paused with the increase in tariffs. And so once that resolves, probably within the next month or so, and there's a little bit more certainty on tariffs, you could probably start to see the Fed lowering interest rates. And one of the things they did message today was that if unemployment does start to rise, they will err on the side of cutting rates as opposed to leaving rates the same and take the risk of higher inflation.
There's, of course, a lot of worry about the economy right now. With that said, why has the stock market, Andrew, been so strong in these last few weeks?
The stock market rebounded from a pretty difficult fall after Liberation Day, when tariffs were implemented for the first time in a big way at the beginning of April. There was some significant drops in the stock market, and we've essentially retraced about half that. That's a pretty normal technical retracement off of a low. So all the stock market's really saying now is that unemployment is at a decent level, consumers are continuing to spend, and we're willing to wait and see what happens with tariff policy. So given all that, the stock market is probably about where it should be right now, but the next step on tariffs is going to tell a lot.
Andrew, what do you make of the U.S. and China meeting to talk about trade? Does this signal China's economy is really struggling?
Absolutely. The 145% tariff between the U.S. and China essentially is an embargo. There was a huge pull forward in shipments from China to the U.S. because of the threat of tariffs. So there's a significant amount of inventory of Chinese goods in the U.S. But once that gets worked off, the Chinese economy is really going to suffer. And so they are in a position where they would really like to get some sort of a workable deal with the U.S.
Yeah, we had a guest on last night who was saying China's talking tough, but they're actually already starting to retreat. All right, Andrew Root, we will leave it there. Andrew Root with Regent University, thank you.